Amazon. You know, it's a company that is quite literally everywhere in our lives, from the packages that show up on our doorstep to the cloud that powers a lot of our favorite apps. But today, we're going to go past the headlines. We're going to pop the hood and do a full financial health checkup using the company's own annual report to see what's really going on. So, the big question we're tackling in this explainer is actually a pretty simple one. Is Amazon's massive business actually getting stronger? We're going to dig right into the numbers to find out. Okay, let's get into it. So here's the plan. We'll start with the revenue engine, where the money comes from. Then we'll solve what I like to call the profitability puzzle, check the balance sheet for stability, look at cash flow and how they invest it, and then we'll finish up with a final diagnosis of its strengths, risks, and the overall outlook. All right, first up, the top line. To understand any company, you got to start with how it makes money. And with Amazon, the scale is just, well, it's staggering. In fiscal year 2024 alone, Amazon pulled in $638 billion in net sales. I mean, let that sink in for a second. It's a number so large, it's almost hard to wrap your head around. But where exactly does all that cash come from? Now, this is where it gets really interesting because it shows you the diversity of the business. Sure, online stores are the biggest piece of the pie, at 39%. But look at the other segments. Third-party sellers, the ones who pay Amazon to use its platform, make up a huge 24%. And then you've got Amazon Web Services, or AWS, at 17%, followed by their fast-growing advertising and subscription businesses. So yeah, this is way more than just an online store. And if you want to know where the growth is coming from, this is the slide to see. While the core retail business is growing at a pretty respectable 9 to 10%, just look at AWS. It's growing at 19% year over year. That's nearly twice as fast. And this is a really critical clue for what we're about to find out next. Okay, so making a ton of money is great, but turning that revenue into actual profit, that's the real test of a business. And this brings us to Amazon's profitability puzzle. Now, to understand this puzzle, we just need one key term: operating income. The easiest way to think about it is as the pure profit a company makes from its main business. It cuts out all the noise from things like interest and taxes, which makes it a fantastic way to measure the true health of the core operations. All right, here's part one of our puzzle. In 2024, the retail side of Amazon, that's both North America and international, brought in a massive $530 billion. AWS, the cloud division, brought in $108 billion. So right off the bat, retail revenue is almost 5 times bigger. And here it is. This is the big reveal. Just look at this. Even though it generated 5 times less revenue, AWS produced $40 billion in operating income. That completely overshadows the $29 billion from the entire retail empire. This right here is the secret to understanding Amazon's whole business model. So the takeaway here is absolutely crucial. While the retail business is huge, and it's what we all see every day, the high-margin cloud and advertising businesses are the true profit engines. The e-commerce side is a game of massive scale and super thin margins, really designed to build that loyal customer base that then uses these other, way more profitable services. Okay, so we've seen how Amazon makes its money and where the profits really come from. Now let's move on to the next part of our checkup, the balance sheet. This is what tells us about the company's financial foundation, its stability, and what a foundation it is. As of the end of fiscal 2024, Amazon was sitting on over $101 billion in cash and easily sellable investments. Now, compare that to its long-term debt of just under $53 billion. That's a very healthy net cash position. And why does this matter to you as a potential investor? Simple. This is a fortress-like balance sheet. Having this much more cash than debt gives them incredible financial flexibility. It's not just a safety net, it's a strategic weapon. It lets them invest aggressively, buy other companies, and just easily weather any economic storm that might crush their competitors. This financial strength leads us right into our next section: how Amazon actually uses its cash to fuel future growth. Because, it's not just about having money, it's about what you do with it. And the CEO, Andy Jassy, he tells us exactly what they're doing with it. This quote is crystal clear. They are investing and investing aggressively in generative AI. Now, that requires enormous spending on things like servers, data centers, and robotics. To track how well they can afford all this, investors look at a metric called free cash flow. What's so important about this is that it's the actual cash left over after a company pays for all its operations and those massive investments we just talked about. For a lot of people, this is the ultimate sign of a company's financial health. And what we're seeing here is that Amazon's ability to generate this cash is healthy and it's growing. Even though they're spending billions on new data centers and warehouses, free cash flow still climbed to over $38 billion in 2024. This shows you that the underlying business is just a powerful cash-generating machine that can fund its own ambitious growth. So you might be asking, how does this cash get back to shareholders? Well, with Amazon, the short answer is it mostly doesn't, at least not directly. They don't pay a dividend, they haven't been buying back stock. In fact, the share count has gone up a tiny bit. Their philosophy is really clear. The best use of this cash is to reinvest every single dollar right back into the business to fuel that future growth. So, after looking at revenue, profit, the balance sheet, and cash flow, it's time for our final diagnosis. Let's pull all of this together into a clear picture of the company's health. On the strength side, the list is formidable. You've got that dominant and incredibly profitable AWS division, a fast-growing, high-margin advertising business, the fortress balance sheet we talked about, and a powerful free cash flow engine that just funds its own growth. It's pretty impressive. But, of course, a lot of these strengths are tied directly to the risks. That amazing growth requires a huge amount of spending, year after year. Their dominance brings intense competition and constant regulatory scrutiny. And that massive retail business, well, it still runs on those razor-thin margins. And this all brings us to the ultimate question for any investor. Is Amazon this mature, invincible fortress that can just print cash from its dominant position? Or is it a company that's on a perpetual high-stakes treadmill, forced to spend billions every year just to stay ahead of a growing army of competitors? The answer really lies in whether those profit engines, AWS and advertising, can be powerful enough to overcome all those risks.